All right, really fascinating report. So why don't we start off where we kind of had you right there with the Warner Bros. Discovery, Paramount. What does that signal? The fact that we're seeing bidding wars, and I also want to kind of throw in the idea we're seeing more debt financing used for deals. Does that signal that we might be at some type of peak? Is that generally what you see at the peak of a cycle?
Well, first, we'll see. But if you step back and think of these deals, companies are looking to scale platforms. They're looking to build and develop and take advantage of strategic positioning. And to me, these deals are all representative of that. And you referenced in your opening, 2025 was a huge deal for mega deals. Take the U.S. alone. We had nearly 75 deals, mega deals done in the U.S. Think of that as a 2x multiple of what we saw in 23 to 24 and 24 to 25.
All right. So you're talking about these mega deals, and that's really one of the keys to your report. So you're looking at the M&A market. If you're looking at the volume, like the number of deals, it's up 2%. It's kind of muted, especially where we're in a situation where we have what a lot of people think is a deal-friendly president. But the dollar value of those deals, that's up about 45%. So that signifies bigger deals. What are these bigger deals? Where do they take us in 2026? Is it kind of like a inertia type of thing? The bigger the deals get, the bigger they get? I'm kind of going back to my first question. Or is this a sign that we might be kind of hitting the limit? Because, again, we're using debt financing. We're doing bidding wars. It's a lot of things that we haven't seen in recent years.
Think about the drivers of the large deals in 25 for just a minute. If you step back, more than 20%, about a quarter of the big, large M&A mega deals were AI-oriented. And if we stare into the opportunity that 26 begins to show, mega deals, again, will be driven by AI, technology. We'll see what happens in healthcare and industrial policy. To me, the real question becomes, what happens in the middle market? You referenced the volume differential between mega deals and deals in aggregate. The middle market will be driven by, do we have a degree of consistency in trade policy? Do rates continue to stay low? And then what do we see with the labor market? Those things, the fuel for the middle market, the fuel for the deal market is what happens to GDP, what happens to corporate profits. It's shaping up, so we'll see what 26 holds.
All right. In your report, you say it's about 20% of those mega deals driven by AI. That seems low. I mean, it seems like it would be more. So where are we trending when it comes to that? I mean, you have obviously a window into some data that maybe a lot of our audience doesn't have and we don't have. And also, just I'm sure you're talking to a lot of people. As we look ahead, are we going to see more AI deals? And if so, what does that say about, we're going to talk about the private markets later in the show. What does that say about the private markets? Does that mean they're cooling off if people actually want to make deals and either cash out of shares of private companies or take them public?
Well, think about a couple of things. First, AI is on the balance sheet at this point in time, and I expect that to continue in 2026, meaning that deals surrounding technology, deals surrounding healthcare, specifically medtech, deals surrounding industrial, which picks up the energy demand that is fueling AI, that will need to be there to fuel AI. I expect all three of those sectors to see a reasonable deal cycle in 26. AI is on the balance sheet, and as a result, returns are otherwise expected. So think we see in healthcare, we see greater point of care delivery as a result of AI. We see drugs coming through the process more in a more expeditious way. Take aviation, we see the friction in transport managed, but keeping planes in flight, but also keeping crews in airplanes ready to go. So the fuel that is AI, I expect will still be there in 26. We'll see if it's a mega deal continuance or a small deal recovery.
All right, we'll have to wait and see on that one. I also want to talk to you about private equity firms and their place in the kind of deal cycle, often called sponsor-backed. You say they have a lot of dry powder.
Yeah.
So is that going to drive deals, the fact that they have the money to deploy, or are they going to still be kind of picking and choosing? We had Robert Smith here on the show before, and he just talked about he's not seeing a lot of great deals. I talked to a lot of other private companies. They're just not seeing a lot of great deals. Does the dry powder, is that the catalyst to make the deal, or does the deal have to be more attractive?
Yeah, well, first, if you think about what we've seen in 2025, think 1,500 of the circa 10,000 deals in the U.S. done with private equity money. Think 8,800 done with corporate buyers. Private equity sets up, you're right, loads of dry powder. We'll see what the market shapes up to be. Again, if we have strong corporate earnings, if we have good labor, if we have reasonable rates, if we have stable trade policy, you're going to see private equity active in 26.
All right. Active in what areas, though? You mentioned healthcare, some other things. Does private equity want to be in AI, or do they want to broaden out their bets like we're seeing in the public markets? We're seeing the public markets say AI is great, but we're not really sure who's going to be the winner. We want to broaden out to some other areas that might actually benefit from AI instead of trying to pick the winners.
Yeah, technology, which to me is AI and AI related. Healthcare, medtech, et cetera. Industrial policies, and industrials, broadly speaking, think electrification, think energy demand, think automation. All three of those sectors I expect we'll see as growing and hot markets in 26.